Hi everybody, this is Jazz, aka Trend Trader for you, and here I am once again, continue to provide some crucial education for beginners to advanced level of trading. Today's topic is going to be candlesticks, the basics of candlesticks, and it's going to be mostly focusing toward the beginner level of traders. Anyways, this is my disclaimer. All I'm trying to say is my teaching lessons are my opinions and nothing to be used as a financial or trading advice. And one thing I want to put a emphasis on is my teachings and presentations may not be copied or reproduced for your own as your own material. Anyway, so let's get started into the candlesticks basics. Okay. So we'll give a little bit of introduction to candlesticks. The history basically was the candle charts were first developed by a well-known Japanese rice trader named Hama in 18th century. Candlesticks is a type of bar chart that shows the price movement of security of over a specific period of time. They're more visually appealing than any other types of charts, and the 3D type of image gives the ability to interpret them much easier. For instance, you have line charts and bar charts. Line charts are good for looking at the trend. Bar charts, you really can't, it's see a whole lot of price action within, as far as with candlesticks, you can see an up day will be green day and down day will be a red day. So it's a choice for the professional traders, the candlestick type of charting. So a candlestick forms as the price movement occurs. So there is no lag like any other technical indicators. They tell you the story of price as it happens. Professional traders prefer candlesticks as their top choice of trading. Every candle has a open, close, high, and a low. And we'll talk about the basics of candlesticks in the next slides. So it is very important to understand the psychology of the candlestick. Each candle, when combined with technical analysis, can help determine the future price of the movement. I wanted to just kind of skim through it, and we'll go right into the candlesticks. But you have this YouTube presentation, you can always pause and try to understand what exactly this introduction to candlesticks is. Alright, so next slide. So every buyer has a seller and every seller has a buyer. By looking at the candlesticks, we can't conclude that there are more sellers than buyers or there are more buyers than sellers. However, each candle represents bullish or bearish sentiment. For the good example for that is if you want to list your house on the market, you have to have a buyer to sell your house. If a seller wants to sell their house, they have to have a buyer to buy somebody's house. So always remember, you can't say that today was all selling or today was all buying. Somebody had to sell their 100 stocks of Apple or Microsoft or whatever it is to somebody who was willing to buy that, and vice versa is true. So candlestick signifies the battle between bulls and the bears. At end of every battle, it shows you who was the winner. The battle could be viewed in a 1-minute candle, 60-minute candle, daily, weekly, monthly, you name it. It doesn't matter. It's all about bulls and the bears, who takes control, and at the end of the close of the candle, who wins the who basically won the battle, right? So candlestick doesn't tell you where the trend is going, but it only helps the trader to make better decision to carry out a successful trade. There are many other aspects of trading that you associate with the candlesticks trading. You can't just basically solely trade off candlesticks. You have to have, for example, intermediate or advanced dips. You have to have support or some kind of resistance, and then you have to find a crucial candlestick pattern at the right place, the right time, and the right location. So there are different candlesticks patterns that can determine the bullishness or bearishness of the price movement. To learn intermediate and advanced level understanding, you can simply email me, and I do provide private sessions, but my whole purpose of this is to, in this presentation, put something out there for the beginner so they get to see what exactly the candlesticks are. But if you want to get to intermediate or advanced, I'm here. So if you like what you see and if you want to progress, you can always email me. Go to my website, www.trendtraderforyou.com, and you can check out more stuff that I offer. Anyways, so let's get to the next slide. So let's get into the what exactly the candlestick is. Okay, so you have a bullish candle and you have a bearish candle. So bullish candle has a open. So let's just say this is 35, this is 37, and high is 38, and this is low is 34. So the candle opened at 35. It went up as high as 38, but it was able to close at 37. And during this time of that, this could be a day, 60 minute, 1 minute. The candle also made a low. So what you really want to concentrate is obviously the whole part of the candle, but open and close are the most important parts. Where it opened and where it closed, and this is what you call a real body. The lower part or the upper part you would call the upper shadow, the wick, or lower you would call lower shadow or the lower wick. Okay, and same thing with the vice versa is true with the bearish. So you had it open, instead of opening down, you had it open up and it closed down. So this constitutes a bearish candle. Price opened at 37, it was pushed all the way down to 35. It made a high and made a low. So the high would be upper shadow or the wick, and the low would be the lower shadow or the wick. And whatever the price is that open and close, that's what you call a real body. Okay, kind of understand the concept behind what a bearish and what a bullish candle is. Bullish is obviously price opens lower and closes higher. Bearish is price opens higher, but it was able to basically the bears came in and pushed the prices down, and they were able to close it lower. Okay, and the next slide. So bullish candle, like we went over the whole thing. Price open lower right here, closed higher, indicates bullish sentiment. Lower shadow or the wick tails indicates that there was some buying pressure from the bulls. Upper shadow or the wick indicates that there were some selling pressures from the bears. So went up, pushed it down, so the bears came in, pushed it down. Green real body indicates that bull won the battle and given it a bullish sentiment. Price movement was clearly written on the candlestick, and that is exactly what it tells the trader, nothing more than that. So this whole candle is telling you that bulls won the fight. Okay, price opened lower and it closed higher, simple as that. You can't say everybody was a buyer in there. Somebody had to sell their stock here to somebody else who was buying it. So you can't just say everybody was buying. Somebody has to sell their stock. So always remember that, okay? Because you'll hear this term about, oh, today was a update. We had a lot of buyers, but that is not true. Every buyer has a seller, and every seller has a buyer. Always keep that in mind. So the whole thing about what we talked about, bullish candle. Excuse me. Sorry about that. That was my little baby. I'm holding her. This is the only time I get to talk about what I'm passionate about, and thank God, man, whoever made pacifiers. Anyway, so let's get back to the candlestick, right? So bearish candle. So price opened higher, which is right around here, and it was able to close lower, and which is here. So creating a bearish sentiment. The bears came in, they kept pushing and closed it right here. They took it all the way down, but there was some bullish sentiment, or bullish or bulls, you could say. They're able to push the prices up. But at the end of the day, who won? The bears won. Okay, so all this is exactly same as what we talked about in the bullish candle. You can go over this, but let's just get to the next slide. Alright, so let's put everything in real life example. Okay, let's talk about open, close, high, and low. So let's just pick any one of the candles. Let's just pick this green candle, right? It opened here and it closed all the way up here. So basically creating a bullish sentiment. As you could see, we have a follow through from here on. It went up, coincidentally. So but this is not going to happen all the time, but it's telling you that this candle was a really bullish candle, and we had a follow through, and bulls actually won the battle here on, and then they kept taking it up. Okay, so right here, this is the bearish candle. Price opened here, and the bears brought it down all the way down here, and they were all able to close it right there. We have a upper shadow and a lower shadow, or a wick, lower wick, or a upper wick. But you see how this candle was at the top and the bears came in, and look, the follow through was great. The follow through went all the way down. But let's just find a candle where obvious the sentiment, the bears sentiment was there, but it didn't have a follow through. So let's talk about something like, for instance, like this one. This candle, it had a bearish sentiment, opened here, closed here, but what happened the next day? The bulls came in, pushed the prices up. So location, location, location is very important where it happens. You can't just say any candle is a bullish candle, a bearish candle. You have to have a location, right timing, right location, and few other things as advanced traders would look for. Okay, and so vice versa. Let's see a green candle. So let's see this one. So you had a green candle opened here, closed all the way down here, had a little lower shadow, and the next day actually the prices start going down. So you can't just say that you're gonna have a follow through every single time you see a green candle. But what you wanna know about the psychology of the candle, which is which one is a bearish and which one is a bullish candle. Okay, and we'll talk a little bit more about in the detail in the next slides. Okay, so let's move on to the next slide. Okay, so these are what you called bullish candles, left to right, left one being the most bullish, and as you move toward the right, it's less bullish, and then it's neutral. So open here and it close here. I want you to think about that, how strong of a candle it is. Price open at 35, and the bulls kept pushing the price up all the way at the top, and that's where it closed. That is a really bullish candle. There were no wicks on the top, no wicks on the bottom, which tells you that there was no selling pressure from the top. So the bulls kept coming in. There were sellers who were selling their stocks to the bulls, but the bulls kept buying and buying and buying, and at the end of the day they were able to close the price at the top. And this one, so this candle, there's a term for it, okay, which is a little bit more intermediate and advanced. And then you have this candle. Price opened here, and the bears came in. They pushed the prices all the way down, but the bulls, they're like, you know what? There's no way we're gonna let you win the battle. So the bulls came in and they kept pushing the prices all the way up. And end of the day, they were able to keep the prices at the top. So open here and closed here. Think about the sentiment behind this. The sentiment is totally bullish because the bears were trying to take control. The bulls said, no, this is not going to happen. We're going to make sure that we close the prices all the way at the top. So either these two candles are very bullish candles. Okay, so like I said, more bullish to less bullish. So on this one, you had it open and it closed, but you had a selling pressure from the top. And then you also have a little bit of a buying pressure from the bottom. Okay, then you have it open and it closed. So you have a lot of selling pressure from the top, but at the same time, you have a lot of buying pressure from the bottom. But the price did close above the open, so hence that that signifies this is a bullish candle. And same as this. Actually, if you think about it, is this a really bullish candle? No, this is not a really bullish candle. You had it open at the bottom and it closed a little bit closer to the open, but look what happened. The bulls did push the prices all the way up, but the bears came in and they kept pushing it down and down and down. What they weren't able to push it all the way down, but they did push it pretty close to where the open was. Okay, so this is what you call a less of a bullish candle. Then you have a neutral candle. This is what you call indecision. You have no decision between the bulls and the buyers. the bulls push the prices up, and same amount the bears push the prices down. So price, the open and the close was exactly the same. So this is what you would call a doji candle, okay? And there, excuse me, and there are different kind of doji candles, which is more again advanced and intermediate kind of candlesticks. Okay, so let's go to, so these are all bullish candles. So let's talk about the bearish candles. Exactly the same sentiment behind it. In a way, it's bearish now instead of bullish. So you had it in bullish, you had a open here on the bottom. With the bearish, you have it open on the top, closed on the bottom. Okay, open here and closed here, open here and closed here. So same thing applies. Okay, so if you let's just talk about this one. You had it open here and close here. Even though this is a uh, bearish candle, but think about the sentiment behind this. The bears came in, they wanted to sell from the top all the way to the bottom, which they did. They were able to, but the bulls said, you know what, uh, the you can say it fundamentally was really strong, or whatever, the earnings came out, or it could be they got upgraded, or 1,000 other things, right? Like I said in my other uh, presentations, that I'm more of a technical guy. I feel that are technically all the fundamentals are built into the charts. Because what exactly is this? These are all, the sellers came in, the bulls were like, you know what, we're gonna make sure that we don't let the prices go down any lower. And they even did better than that. They were able to push the prices up, all the way up, very close to the open. So makes it actually a bullish candle. So if you think about it fundamentally, what happened that day? Maybe earnings, maybe upgrade, maybe, some kind of news or something. But all that fundamental news is factored into this candle. Again, this could be a daily candle, weekly candle, monthly, 1 minute candle, or even like 5 minute, 10 minute, whatever you want to call. So every candle will have bearish or a bullish sentiment. It's for you to decide where the location is, what the right point of entry and exit, blah 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 are. Okay, so last candle is your same as the bullish candle, uh, open and close, same amount of buying pressure, same amount of selling pressure from the top, and that's why it's a neutral candle. And again, the location where it happens, that's what the most important part is. Okay. Anyways, guys, so that was it. That was my basic presentation. Uh, these 10 slides came right out of my master PowerPoint presentation that I teach my private clients. What I wanted to talk about is I will be putting videos like this, 15, 20, 30-minute videos. Last week I did a whole sector rotation, or how to pick the best or strong or the weakest, or how to correlate them with the broad market. And it did get a lot of hits, but I'm just trying to put some information out there that's useful for the any type of trader, and just pass it on. And I'm also on the Twitter, also on the stock Twitter, so follow me. And I do post a lot of day trades. I'm more of a day trader than a swing trade. And in order to be a day trade, you have to know a lot of stuff to its full extent. You have to know the candlesticks, you have to know how the trend works, you have to know how to take a trade in conjunction with a SPY. So all that matters, and that's what makes you a better trader than somebody who's just trading right off of candlesticks. Okay, so anyways, so follow me on Twitter, and my website is www.trendtraderforyou.com. Check it out. I do post my winning calls there. I also post the weekly analysis, and also feel free to sign up for the free weekly analysis, and about 6 to 8 trades a month. All right, guys, you guys have a good day, and trade safe and stay green.